particular segment is to be selected. As a next step, as I said, we have to consider the margin or the segment results of only the relevant segment, and allocate the unallocable income and expenditure, and arrive at the final margin for that comparable segment. So, under the ITS activities, having done and arrived at the comparable companies under the Provis database, which are the 4 companies, and also having verified that they do not have any significant related party transactions, and also having considered the relevant segmental data, we proceed towards the capital line search. So even under the capital line search, again we select the tab of screener, which enables us to select relevant industries. Again, on the on the bottom left hand side, we select the tab industry and key in various keyword search, which according to us would help us arrive at a set of comparable companies which are in the same industry as the tested party, although their activities may be different, but broadly they are classified in the same industry. So this step we need to repeat again and again. So let's say industry, computers, then on the top tab, all the companies or all the industries which are having computers in their name get displayed. Out of that, we select only the relevant ones. Thereafter, again we repeat this step to say IT enabled. So we need not give the entire phrase, but even if we type part of the phrase, so let's say when we type computer, that also would give, or in fact that would give us more companies or more industry classification rather than when we select computers. So that's how we select the relevant industry. Once we select the relevant industry, all the companies classified under that industry automatically get added to the list of potential comparables on the right hand side. So this step again shows we apply a new industry filter, which is IT enabled, to arrive at a more number of companies which may be classified under the head IT enabled. Thereafter, we save this peer set to perform further analysis. Having saved that peer set, the next step is to apply the relevant financial and the year filter as we did in the earlier searches. To apply the filters, again on the right hand side we select the tab company background and relevant filters like year end, which will help us define on the right hand side what is the relevant criteria which we want to select. So again on the right hand side we give that select companies where only the data available is between March 2011 and March 30. When we press enter, that filter automatically gets added to our search. Similarly, for sales criteria, we select the tab sales and define what our parameters are depending upon the financial information of the tested party, and that also helps us to add an additional filter. Having done that, we press the button run query, and we get the output for all the companies which are classified under the industry which is selected by us, and which also satisfy the filters which are applied by us in earlier steps. So these are the filters which we had applied in the earlier steps, having known that the tested party was engaged in provision of IT-enabled services. And these are the set of comparable companies arising as a result thereof. As a final step, again under the capital line search, we undertake the qualitative screening of the potential comparable companies, verify the financial, verify all the sources, website of the company. There is no more authentic source than that to understand the activities of the potential comparable companies. Also, a lot of industry reports on companies are available on the internet. The same can also be used and leveraged upon to determine whether the activities are comparable or not. But one important thing is whatever source we use, other than the financials of the company, because financials of the company will always be available at the time of assessment, being in the public domain. So it is very easy to produce all that before the TPO. But if we are relying on some external source, like some industry report or something like that, then it is very important that we save it in our records and to prove to the TPO that this is what the information was available in the public domain, this is what we relied upon, and on the basis of which we have selected or rejected this one. So after having applied all these filters, again for this activity, we arrive at a set of five comparable companies under the capital line search. Again, we need to do the computed check whether any of these companies are having significant related party transactions, which may result in exclusion of such companies, or we need to consider only relevant segments for any of these companies, which are there as we did in the earlier segment. So, any questions? I will be happy to answer.
When we are searching, whether we have to search for both OS and capital line because the data are different.
Yes, it's important that we use both the databases because often it is witnessed that we do get additional comparable companies from a different database, that is capital line. So if at the time of TP study we use only ProVis database, let's say, and thereafter at the time of assessment TPO uses both ProVis and capital line, and arrives at additional set of comparable companies, then definitely the margins or the average arithmetic mean margin of the comparable companies would different than what has been arrived at by us. And it would be very difficult for us to challenge or defend not having used that database, because since this information is already available in the public domain. So it's important that we use both of these.
If it is, if the company is in a service industry and it's in a different layout, say for example a management fee or a business development or business a planned set of services.
So you say that comparables engage in exactly the same activity are not available in the data.
Correct.
Yeah. So under transactional net margin method, the focus is on the functional comparability rather than actual product comparability. So to the extent possible, yes, we do select the companies which are dealing in same products, same services. But there may be certain industry which are so niche that comparables for the same thing are not available. Then we broaden the search based on the functional activity of the company. So let's say you say that the company is available in only providing
business development.
Yeah, business development services. Then maybe we can use a set where the comparables are that are undertaking marketing activities. So we broaden the search, but then we need to see that primarily the activities of the comparables are also services, and it's not engaged in any additional.
Correct. But is it easily available on ProVis? I think Capital Line has a separate set for criteria for business development and management.
ProVis, it's not there, but thereafter then again we have to go through the industry filters which are available and see, use the words business development, marketing support, commission agent services, support services, all such services. So that would give us a broad set, and thereafter undertaking a qualitative analysis we would be able to identify the company.
Sir, when we are talking of this database and all that, one really needs to understand that what is the total profitability that I have done in the transaction. Looking at my profitability, the profitability of the associated enterprise. Sometimes you really find that the database really gives you results which are so different. And if I am really able to look at my overall profitability and try to judge what profitability has gone to the associated enterprise, is that commensurate? Why should I really go to all this database? I have a client who really tries to defy the other way. Your progress results could be very different. You look at my FAR analysis and say that total profitability is this, and whatever profitability is lying with the associated enterprise, whether that is justified based on FAR, if that is okay, I don't want to.
Certainly. So, as you know, so let's say in your case, if the Indian entity is engaged in similar activities on its own account, so it's not servicing the parent company, but it is also undertaking similar activity on its own account, then the first step is to see whether the two activities are comparable and compare the same only. And in that case, it is quite likely that the profitability of Indian entity is likely to be the same under both the segment, be it your related party segment or your own activities. So that's the best comparable. Even the rules allow the use of same internal comparable. And in fact, various ITAT judgments say that internal comparables are in fact preferred over the external comparables. So yes, if you can prove by that yes, see my, you need not go on the database, but look at my internal thing only. If you can prove that, then nothing like it. But what your question is again, that the split of profitability between what goes to the parent company and what remains in India. Yes, having determined the activities of the tested party in India and what your parent company is doing, you say a split of 10:90 is appropriate. Okay, but then that 10 should be sufficient enough to cover all your operating expenses. Thereafter, how do you judge that whether for similar activities, if the parent company would have rendered or availed the services, similar services from a third party in India, whether how much a third party in India would have earned out of it, and whether it would have been agreeable to render that services at 10 or it would have asked for 15. So therefore, to determine that, you have to test the margin of the investment.
See, in assessment year 9-10, this year the department has been good enough to really take a call which is logical. Last year they have done additions where you find that the associated enterprise did not have that much profitability, which he has added to the Indian entity, which was all.
Yeah. So department they make an adjustment even on issuance of shares, as you know. So yes, but there's a good case to fight it out and it's an unfortunate thing, and there's a good case to fight it out at the higher appellate authorities. But when we do this analysis, this just helps us to support that this is the basis of arriving at my pricing. And in fact, there are a few ITAT judgments which have even held that the total margin which is expected or which the Indian entity is expected to earn. So let's say if Indian entity earns 10 rupees, and if the TPO says no, Indian entity should have earned 50 rupees. So after having added that 50 to the income of the Indian entity, if the total margin is is more than what you actually earn from the customers, then that's not acceptable. So there are judgments to support that, but definitely it's difficult to convince the TPOs because they have the target of they even have a tendency of looking only at the one side of the transaction rather than looking at the overall. But in such cases, definitely there is a good chance at the higher data.
Even in case of CUP data that is available, what they are trying to filter it out is whatever is in favor.
Absolutely.
But wherever if you have a difference, I'll just subtract that.
Right.
What?
So that's cherry picking to an extent, but that is practically what they do, and there's no choice but to appeal at the higher appellate authorities.
What do you suggest? That what type of data, when we have to use this database? For all the methods,
Definitely for cup method and all, this database won't be available or rather applicable, because this doesn't give the information about any pricing. So in such cases, there are customs databases which may be used, which gives us actual pricing of various products. But for RPM, resale price method, which is also very seldom used, we can use this database. So we can follow all these steps, but only instead of computing the net margin, we compute the gross margin of the company. Thank you for a patient listening.